What's going on, everyone? Shiraz Ahmed here. Now it's tax season, so it's that time of year where we're all wondering what can we do to hopefully lower our taxes and frankly make this time of year a little less stressful than it needs to be. Now today I'm going to give you my top 5 tips to help you save some money and reduce your tax bill, so stay tuned. Okay, so my obligatory disclaimer as a licensed financial professional. Now, the content in this video is for information and educational purposes only. I am not a CPA, so this video should not be considered to be tax advice. If you're ever unsure about your situation, please consider speaking with a qualified tax professional. All right, so now with that out of the way, let's get into my top tips. Starting with number 1, consider contributing to your Registered Retirement Savings Plan, or RRSP. Now, I've actually made a dedicated video on this topic, so if you wanted to get more detail on that one, click here and that will take you to that video. But one of the best ways to reduce your tax bill as a T4 employee, which is majority of us here in Canada, is by contributing to your RRSP. Now, the Canadian government provides you with an incentive to encourage Canadians to save for retirement. When you contribute to your RRSP, you'll actually receive a tax deduction in the amount that you contributed, which will actually lower your overall taxable income. Now, it's important to note that there are limits to how much you can contribute to your RRSP each year. Now, for 2023, the limit is 18% of your earned income, up to a maximum of $30,780. However, if you haven't maximized your contribution in previous years, you can actually carry forward some of that unused contribution room into future years. So it's really important to check your previous notice of assessment that you got in the mail after you filed your taxes, or even logging into your MyCRA portal to get accurate information on how much you can contribute. Now, contributing to your RRSP not only reduces your tax bill, but it actually also helps you save for your retirement. So really, this is a win-win situation. All right, on to tip number 2, which is to take advantage of tax benefits and credits. Now, in addition to RRSP contributions, there are many tax credits and benefits that are available to Canadians. Now, these benefits and credits are designed to help you, frankly, save money on your taxes and also cover some of those expenses that you might incur throughout the year. Now, for example, if you have children, you may be eligible for the Canada Child Benefit, which is a tax-free monthly payment designed to help parents with the cost of raising children. Now, you may also be eligible for the childcare expense deduction if you pay for childcare, for example, while you're attending school or working. Now, there are other incentives and tax credits like the medical expense tax credit, which allows you to claim eligible medical expenses on your tax return, and the public transit tax credit for seniors, for example, living in Ontario, which lets seniors claim a provincial tax credit for using the public transit system. And let's also not forget about the charitable donation tax credit, which allows Canadians to claim a non-refundable tax credit for donating to a qualified donee. Now, to take advantage of all these credits and benefits, it's really important that you keep detailed records of your expenses throughout the year. Now, this will help you identify, which of these that you'd be eligible for and ensure that you're claiming them on your tax return. Okay, so this brings us to tip number 3, which is to keep proper records. Now, it's probably a good idea to not keep everything in a shoebox. So one of the key ways to maximizing your tax outcome is to keep proper records for your income, expenses, and receipts throughout the year. Now, this will make it much easier for you to file your tax return accurately and quickly and help you avoid some potential mistakes or omissions that could theoretically trigger an audit. So there are many tools that are available to help you track your financial documents, including spreadsheets, accounting software, cloud-based solutions, and even the old-fashioned paper solutions which exist. Now, frankly, it doesn't matter which one you choose, just make sure it's one that works best for you and ultimately that you stick with it consistently throughout the year. Now, some of the key documents that you're going to want to keep track of include your T4 slip, which shows your income from your employer, receipts from charitable donations, medical expenses, childcare expenses, any transit expenses, for example, if you're in Ontario, and RSP contribution receipts as well. Now, keeping these proper records, you'll actually be able to file your tax return with confidence and ensure that you're claiming all the deductions and credits that you may be eligible for. All right, now tip number 4, which is consider using tax preparation software. Now, if you're not comfortable filing your tax return on your own, consider using tax preparation software. Now, there are many options that are available, and some of them are actually free from commercial software companies. Now, you can refer to the CRA website for a list of free and paid software solutions that are available. Now, tax preparation software is actually designed to help you, frankly, ask the right questions and help you claim all the deductions and credits that you might be eligible for. So it can also help you avoid some of the most common mistakes and ensure that your taxes are filed accurately and hopefully on time. Now, when choosing tax preparation software, make sure that you choose a reputable provider. It's suggested that you read reviews from other users to ensure that, frankly, the one that you're using is easy to use and reliable. Now, this actually brings me to tip number 5, which is consider consulting with a tax professional. Now, if you have a complex tax situation, or frankly, you're just unsure about how to handle certain deductions or credits, it may be worth consulting with a tax professional. Now, this could be a chartered professional accountant or CPA or a tax lawyer who specializes in Canadian tax law. Now, a tax professional can provide you with personalized advice and help you identify any additional deductions and credits that you actually may have overlooked. Now, they also may help you navigate some complex tax rules and regulations to ensure that you're in compliance with all the necessary requirements. Now, while consulting with a tax professional may come with a fee, for many, the potential savings and or peace of mind can be well worth that investment. Now, make sure that you choose a reputable professional with experience in Canadian tax law, and don't be afraid to ask for references or even check out reviews for your professionals. Alright, so to summarize, by following these 5 tips, Canadians can look to maximize their tax outcomes and make filing their taxes a little bit easier. So by contributing to your RRSP, taking advantage of any available benefits and credits, keeping proper records, using tax preparation software, and consulting with a tax professional if necessary, you can save money and avoid potential headaches during tax season. Now remember, taxes can be complicated, but by taking proactive steps throughout the year, you can minimize your tax bill and ensure that you're actually in compliance with all the necessary regulations. I want to thank you all for watching all the way to the end. If you've appreciated the content that I've been creating, please consider hitting that like and subscribe button, as it really does help out the channel. Now, the bell icon will notify you the next time I upload a video. I'll also put my contact details at the end of this video, so if you have any suggestions on topics you'd like me to cover, or even if you just have a question for me, please drop me a line. I look forward to hearing from you. Now, until next time, please stay safe out there, you all. Bye for now.